stocks receive the majority of attention while investing. Although buying individual stocks is one approach to increase your wealth, there are many other financial assets that you should research and comprehend. And also, there are some assets that will surely make you rich in the coming years. Yes, you heard it right. And we will be revealing 9 of them in this video today. Do watch the video till the end, as this single video may change your life. So now let's start. 1. Stocks. The fundamental components of investment are stocks. You obtain ownership interests in a public corporation when you purchase stocks, also known as equities. Your shares of stock ought to increase in value as the business expands and generates more earnings. Being a shareholder may even provide you the right to dividend payments. Because the firm is expanding, you can make countless earnings from stocks. But make an effort to focus on stocks of significant corporations. 2. Bonds. Bonds are fixed income securities that governments and companies issue to raise funds to finance initiatives. Lending money to the issuer occurs when you purchase a bond. In return, the bond's issuer gives you interest, and after the bond's maturity date, the issuer gives you your initial investment back. Bonds have smaller returns than stocks but are less risky. You have 2 options for buying bonds. Either you may do it directly from the issuer or you can do so through a brokerage account. If you want to know more assets to invest in, then do subscribe our channel and also press the like button. 3. Cash. Professionals in the financial industry don't actually mean actual notes and coins when they refer to cash as an investment. The short-term assets that give steadiness to your investment portfolio are cash investments, often known as cash equivalents. If you have immediate financial needs and short-term goals, cash equivalents might be helpful. Also interested in them are retired investors who cannot afford to take on a lot of risk. Banks or TreasuryDirect.gov both allow you to invest in cash equivalents. A few brokerage businesses also provide CD accounts that are brokered. 4. Mutual funds. A mutual fund combines investor money to buy a variety of stocks, bonds, and other securities. Financial experts with extensive expertise oversee the portfolio, which consists of all of its holdings. Mutual funds are a less risky form of investment than individual equities. By purchasing a variety of stocks or other securities all at once through mutual funds, you may diversify your portfolio. There are tens of thousands of mutual funds, but we've narrowed it down to the top few to get you started. T. Rowe Price, Vanguard, and Fidelity Investments are a few of them. You might make a purchase. 5. Index funds. Long-term investors are ideally suited for index funds, a type of mutual fund that is passively managed. Index funds seek to duplicate the performance of market indices such as the Dow Jones Industrial Average, DJIA, or the S&P 500, whereas many mutual funds are actively managed by experts who strive to outperform the performance of a market benchmark. Since you may invest in a variety of businesses or sectors at once, index funds offer diversification similar to traditional mutual funds. The portfolio's other firms may be able to make up losses if one company in the fund performs poorly. Through your brokerage account or a retirement plan offered by your work, you can purchase index funds. 6. ETFs, or exchange-traded funds. ETFs, like mutual funds, aggregate investor funds to purchase baskets of assets, such as stocks and bonds. ETFs might follow market indexes, or they can concentrate on specific industries, such as domestic technology shares or overseas energy businesses. ETFs are a fantastic option for novice investors who don't have a lot of cash on hand because they often have lower investment minimums than mutual funds. They are bought and traded all day long on market exchanges, much like stocks. Through brokerage accounts and employer-sponsored retirement plans, you may purchase ETFs. You are welcome to comment below if you are new to investing. We will assist you in making smarter financial decisions. 7. Annuities. An annuity is a legal agreement between a person and an insurance provider. When you buy an annuity, you can pay the insurance provider in monthly payments or all at once. For a specific amount of time, the insurance company commits to pay you on a regular basis in exchange. Annuities are frequently used by many people to get a reliable income source throughout retirement. 8. Derivatives. Financial products called derivatives have values that are derived from an underlying asset. Futures, options, and swaps are the three most popular derivative product categories. Futures deals. Contracts for the purchase or sale of an item at a future time and price are known as futures contracts. You may, for instance, consent to purchase gold in 6 months at a price of $1,000 per ounce. You stand to gain if the price of gold increases to $1,200 an ounce. On the other hand, you will lose money if the price drops to $800 for an ounce. Choices agreements. Similar to futures, these contracts provide purchasers the option but not the obligation to buy or sell a certain asset at a specific price and date in the future. The right to acquire an asset is granted by a call option, and the right to sell an asset is granted by a put option. Swaps. These are agreements between two parties to trade future cash flows. In place of a variable interest rate, one party can, for instance, agree to pay another party a fixed interest rate. The usage of derivatives can be utilized to hedging against losses or making predictions about future price changes. However, because they frequently include risk and complexity, they might not be a wise choice for the typical retail investor. 9. Cryptocurrencies. Cryptocurrency has attracted a lot of interest as an investment asset. Bitcoin, BTC, is the most popular cryptocurrency, but there are a lot more. XRP and Ethereum, ETH, are two popular cryptocurrencies. Because of the potential for extreme price volatility, investing in cryptocurrencies is dangerous. Similar to other financial assets like stocks and bonds, these assets are not subject to the same regulations. However, as governments show a greater interest in regulating the industry further, this may change. Through a cryptocurrency exchange, like Coinbase or Gemini, you may purchase and sell cryptocurrencies. That's all for this video. Now you know all the assets that may make you a millionaire in the coming years. Do invest in these assets to get rich, as investing is the easiest way to generate wealth. Subscribe our channel if you want more videos like this. Also press the like button to motivate us. Share this video with all of your friends. And also let us know in the comments that how many assets you already knew and invested in. Thank you for staying with us till here.